Good day. My name is Brett Ledouche, and I am the author of the book Pensions for Palookas. You can buy my book at www.pensionsforpalookas.online, or you can buy it directly from Amazon, Smashwords, and Takealot. In today's video, I will cover the issue of home loans. Uh, in chapter 3 of my book, I look at all the benefits that are offered by pension or provident funds, and one of the ones that not a lot of pension fund members know about are home loans. So, what type of loans can a fund offer? There are normally two options, and that is only if the rules of the fund allow for that. It can either be a direct loan. So in that case, the pension fund or provident fund acts as a credit provider to its members. So they will directly offer a member a home loan, and that is funded with the assets of the pension or provident fund. The other option is a guarantee. So what will happen is that the member will go to a bank or to another credit provider that offer home loans, get a home loan, and what the fund would then do is the fund would give a guarantee for a certain amount or certain portion of that home loan to the credit provider. So let's say, for example, you want to buy a house of R1 billion and you've got R1 billion in your pension fund. What the fund can do is the fund can say to the bank, we will give you a guarantee of R500,000, plus you can also put a bond on the house for R1 million, which would mean that your credit provider will now have security of R1.5 million on a R1 million loan, which should then reduce their risk in case of a default. So it's either a direct loan or it's a guarantee that is given by the fund to a third-party credit provider. So what can this home loan be used for? Firstly, it could be used to pay off an existing loan. Secondly, it can be used to buy land, and that land will be bought for the purpose of putting up a home for the member. Thirdly, it can be to buy a house. And fourthly, where the member has an existing house, it can be used for renovations or even for the maintenance of that house. So as you can see, there are quite a few purposes for which you can use, but you can only use the home loan for one of these purposes. You cannot use it, for example, to go and buy a car. You can only use this money to apply for to a house or buying land. So there are also certain conditions in terms of the Pension Funds Act that must be complied with before a fund can provide you with a home loan or guarantee. Firstly, you as a member or your dependents or your spouse must stay or occupy that property. So you can therefore not get a home loan from your fund for an investment property that you want to rent out. That will not be allowed. Secondly, security must be provided. And as I stated earlier, the security will either be a bond that the credit provider takes out, or it will be a guarantee. And where the fund gives a guarantee, it would mean that the member must pledge his or her benefits in the fund. So in my earlier example, the member wants to buy a property of R1 million. If the fund gives a guarantee of R500,000 to the credit provider, then the member must also pledge R500,000 to the fund, so that the fund is never exposed to the tune of R500,000 if something should go wrong. Okay. The third condition is that there can only be one loan at any time. So no member can have 4 or 5 or even 2 simultaneous home loans that either have a guarantee or a direct loan from the fund. The fourth requirement is there's a minimum interest rate that must be charged by either the fund or the credit provider who provides this. And currently it's equal to the repo rate plus 2%. And currently the repo rate is 5.5%. Plus the 2% would then give you a minimum interest rate of 7.5%. Okay. The fifth requirement is, or condition is, that there is a maximum term, and that maximum term for the home loan is 30 years. So the home loan can never be older than or longer than 30 years. But there is also another condition under the term, in the sense that this 30-year term, if it extends beyond the normal age of retirement, let's say that's retirement age. So if it goes beyond your date of retirement, then the portion of that loan that must still be payable there must be less than 1/3 of your total benefit, which means, for example, if you've got a benefit of 3 million rand at retirement, the outstanding home loan cannot exceed 1 million rand. Okay. Just to recap, one of the big benefits provided to you as a member by your fund is possibly a home loan if the rules of the fund provide for home loans. I think you owe it to yourself to go and find out from your trustees or from the principal officer of your fund, firstly, if your fund offers a home loan and to what extent you can use that to provide for you and your family. Thank you.